China is playing a completely different game when it comes to gold. Here's the thing. The data China has officially put out on record says they bought 40 tons of gold in 2026 and added it to their reserves. But a report from Goldman Sachs tells a completely different story. It suggests China actually bought double that amount, around 80 tons. So why is this happening? Let's try to break down the whole story. But because of this, going forward, we can expect to see a positive impact on gold prices. And along with that, there's another report out, a Bank of America survey. It shows that over the past 3 years, gold is considered the most undervalued asset by fund managers in the USA right now. Now think about it. When big fund managers consider something undervalued, do they buy it or sell it? Obviously, they buy. So ultimately, if you're looking at gold from a long-term perspective, you shouldn't worry. But in the short term, there is some turbulence, and that's because of tensions between Iran and America and uncertainty around whether the Fed will cut interest rates. But the way China is maneuvering right now, let me explain that too. Before that though, make sure to follow the channel and don't forget to like and share this video. Here's the thing, when global conditions are like this, when there's an atmosphere of uncertainty, central banks and countries want to move toward a safe haven asset that they can rely on as an alternative in the future or in case of an emergency, and gold turns out to be the best option for that. Now, if China has quietly bought double the amount it officially reported, that tells us something. It suggests China anticipates that global conditions could get worse going forward and knows that gold will be the fallback asset in tough times. Also, don't forget, on the 24th, China also suspended leveraged and paper trading going forward. That means you can no longer do futures trading there. You can only buy physical gold. For people who are doing futures or leveraged trading, if they demand delivery, physical gold needs to be available in the market to meet that demand. So this is another theory being floated, that this could be one of the reasons behind the move. But ultimately, demand for physical gold is going to increase, and that will have a positive long-term impact on gold prices. And along with that, don't forget, the Bank of America survey shows that U.S. fund managers are viewing gold as an undervalued asset. That means going forward, we're not talking about small purchases. We're talking about fund managers looking to buy in the range of thousands of crores. If that happens, it could ultimately have a positive impact on both gold and silver prices. In the short term, there could be some minor volatility. We can't rule that out. But in the long term, it looks like gold's future is bright. What do you think? Let us know in the comments.